Hello, everyone. Welcome back. I got some really good ones for you today on this Friday, May 12th, 2023. A lot's been going on with the markets, so let's dive right into it, shall we? The three major U.S. stock indices all pulling back today and pulling back for the week. I saw the dollar come up about 0.5% today. That's a modest move higher for the dollar. Kind of pushes down on the stock market, oil, Bitcoin, and gold when the dollar moves higher like that. Saw the 10-year yield move up from 3.4 to 3.46%, so about a 6 basis point move higher in the 10-year yield. As yields, the dollar, interest rates, as those rise, it generally pushes down on the stock market, oil, Bitcoin, and gold. So dollars, dollar derivatives, things tied to the dollar, as those move up, pushes down on stocks, oil, Bitcoin, gold, real estate. Kind of get my drift there. Seeing that mechanism at play. A lot of fear, uncertainty, and doubt around the debt ceiling, the looming debt ceiling crisis. Personally, it's a non-issue to me. I'm not concerned at all. We've raised the debt ceiling 80 times since 1962, around 80 times, a lot, guys. So any and every excuse for both sides to ultimately compromise, meaning the Republicans and the Democrats, ultimately compromising, keeping the beast system alive, keeping the debt-based monetary system alive, printing more and more in perpetuity just to maintain where we are, never mind additional growth and productivity. I don't see that stopping. I could totally be wrong. The government will start to go a little broke by July if we don't have these issues sorted out. But so if we get into June and we haven't really gone anywhere, it could get a little weird, but ultimately not worried about the debt ceiling at all. I'm somewhat concerned about this consolidation of the banking sector we've been witnessing. So the larger banks like JP Morgan, Bank of America, Wells Fargo, Citi, Goldman Sachs, stepping in and buying this distressed capital, these smaller regional banks. That's a problematic issue in and of itself, but not necessarily problematic for asset prices. So I'm kind of putting that off to the side. Because again, if the derivative exposure that a lot of these banks has, causes the system to implode and stocks to begin to implode, the Fed has an interest rate cut in their back pocket right now. Now, I do not see the Federal Reserve cutting interest rates unless something goes wrong. A lot of traders are predicting by July the Fed will be cutting. Personally, I don't think the Fed is going to cut for the remainder of the year unless they have to come back and cut and something goes wrong. But I see no hikes or cuts. I see the Fed's long pause has now arrived, and the Fed's just going to hold interest rates as steady as they can for as long as they can until ultimately something goes wrong. Then they'll cut interest rates again, prop the system back up. So the debt ceiling, the consolidation of the banking sector, like an oligopoly forming in the banking sector, that's a little bit concerning. But the debt ceiling, not so much. And I think the FUD is a little overplayed. Cryptos remain under pressure, but still bullish. Bitcoin, Ethereum, altcoins. I got a Unifill the other day in the 496 range. So I'm hanging in, high growth tech, crypto, oil, gold. Gold hanging out right now at about 2,000 an ounce. Just kind of doing its thing. Hanging out pretty close to all-time highs. Maybe interest in the sector has cooled a little bit, but otherwise gold just kind of hanging out, pretty high and just kind of doing its thing. If gold were to pull back into like the low 19s, I would personally look to start stacking some more. But otherwise, just chilling, not really doing anything with that. It's really all I got for you guys for right now. Crude hanging out, at 71 a barrel, so that's pretty freaky. I think the powers that be ultimately want crude oil to trade in the 75 to 125 a barrel range. So I think crude could be a little bit undervalued here. So we're just going to have to kind of see. The markets want to see crude move higher, okay? So if you're looking at like the S&P 500 and you're wondering, what would help it go up? Well, crude going up a little bit, would be good. The dollar moving lower would be good. Bond yields to remain stable or lower would be good. Yeah. Inflation remains a problem. I read an article like a week or 2 weeks ago saying food inflation since the pandemic's about 31%. Okay, well, we got 9% left to go then, because the Fed added 40% to the money supply at the outset of the pandemic because they didn't want a bag hold. They didn't want to let the B system collapse. So they added 40% of the money supply, stuffed that into the system. And now food inflation a few years later is 31%. So we got a little bit of ways to go there. It's what happens when you add 40% to the money supply, and people will say, no, that's not how it works, because those are just bank reserves and they just sit on institutional balance sheets. They don't circulate in the real economy, so it doesn't technically create inflation, da 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 da. Somebody owns those dollars. Those dollars will move. That's it. When you add 40% to the money supply, you get 40% inflation. Period. End of story. No surprise there. So inflation continues to be a problem, but you're just going to have to get a pay raise. You're just going to have to bite the bullet. Hold on to your assets, get a pay raise. We're just going to have to inflate out of this thing. People on Social Security and fixed income, they're pretty jammed up right now. They need to advocate for, raising that entitlement. Because every time they raise, the amount they pay you 3% and prices and core inflation goes up 30%, you're just being flushed down the toilet. The middle class is just being decimated. And where does that ultimately, all that stolen labor ultimately end up? In the jacked up stock market. So you can get frustrated about that. I certainly do. If I didn't laugh about it, I'd cry, kind of thing. But that's kind of the system you're dealing with. And that kind of piggybacks on the debt ceiling drama you're experiencing right now. So there you go. It all kind of ties in. It's a debt-based monetary system. It's going to keep feeding. The banking sector is going to keep consolidating. Interest rates, the Fed's going to hold them steady, in my opinion, as long as they can. Maybe no more hikes or cuts for the rest of the year. But as soon as something goes wrong, more cuts. So tentatively bullish large cap oil, large cap tech, crypto, gold. Yeah, nothing's really changed here. I know that kind of gets old saying that over and over again, but carry on with the plan of life. We'll reconvene as things progress. Hope you have a wonderful weekend. Thanks for hanging out with me. Like, subscribe, comment, share, whatever. You guys are awesome. And we're just going to keep going, all right? Till next time.